So now we'll talk about general standards and accounting principles, which fall under section 1.300 of the code. So basically the first one is actually quite similar to the principles that we talked about at the beginning of this chapter. So a member needs to follow standards relating to professional competence, to professional care, making sure they plan and supervise the audit properly, making sure they get sufficient relevant data to support their opinion. So these things also sound very similar to the principles underlying an audit conducted in accordance with GAS that we talked about at the end of chapter 2. So that's the other reason why they sound so familiar. And these standards are very straightforward, so I won't read them out to you, but basically they're saying you shouldn't be stating an opinion that financial statements are in conformance with GAAP if it's not true. All right, we also have some rules surrounding confidential client information. All right, so for the most part, all your client's information that you're privy to as part of conducting the audit is considered confidential, and you're not allowed to disclose it except in a very few circumstances. And so these are circumstances where it's okay to discuss the client's confidential information. It would be things like if you are undergoing peer review or PCAOB inspections. Remember, we talked about how periodically for private companies, peer reviewers come in. For public company audits, PCAOB inspectors come in. And they're going to look at the work we've done and tell us, are we doing a good job? Do we need to improve, etc. So they are allowed to see the audit files in order to do those reviews. Also, things like complying with a valid subpoena, right? If we get subpoenaed as a company's auditor and we come in and we're on the stand testifying, we are allowed to reveal confidential client information then. So part of other disciplinary proceedings, if there's purchase, sale, or merger of the audit firm practice, meeting other disclosure requirements, these are some of the other reasons. And I feel like I've seen a lot of questions around when is it okay, when is it not okay? So make sure that you feel very familiar and confident about when it is or is not okay to share confidential info. Contingent fees are forbidden. The contingent fee is basically when we have a quid pro quo, and we had an example of this, I believe in chapter 2, where there's an exercise with, I believe, Sally Jones, CPA. She's doing an audit for a company that wants a bank loan. And they said to her, hey, if the results of this audit look good and we get the bank loan as a result, we'll give you 2% of the bank loan just for helping us out. This is a contingent fee because you're saying, hey, if you scratch my back by giving me an unqualified audit opinion, then I'll scratch your back by giving you 2% of the proceeds of my bank loan. We're not allowed to have arrangements like this. We're also not supposed to commit acts discreditable to the profession. This is very general. It could be anywhere from fraud to murder, probably. And this rule basically says we can't solicit in a false manner, deceptive manner, use coercion, etc. So you can't hold a gun to somebody's head and say, hey, I'm going to be your auditor, right? You're going to pay me lots of money to audit your financial statements or else. We're not supposed to do anything like that. Also, referral fees are prohibited. So if you're, hey, I can't audit you because I'm not independent, but let me refer this other guy I know, he's a great auditor. That person that you referred cannot pay you any kind of referral fee or commission. And this is kind of a silly rule. Basically, you can't have things like members of the AICPA in your firm name unless all of your members of your firm are CPAs. So let's talk about disciplinary actions. What happens if somebody breaks the rules? So the AICPA has this PEEC, or Professional Ethics Executive Committee, which can take remedial or corrective actions, which can be things like taking away your CPA license or suspending your CPA license. And the AICPA also gives to us what's known as quality control standards. And basically these are, I'm sure you already know what quality control standards are, but these are quality control standards from the perspective of the audit firm. So these are things that audit firms need to make sure they're doing well, guidelines that they need to follow to make sure everything is above board. And as part of your PCAOB inspections, they will look at the firm's quality control. So they will look at audit work that you've done, right? That's what they spend most of their time looking at. But they also will look at the audit firm's quality control system. And they want to make sure that these 6 elements are in place. So the audit firm should have good tone at the top. The audit firm should have their own set of ethical requirements. They should have rules in place for what kind of clients they're going to accept and what kind of clients they want to keep working with. They should have HR policies in place, like everybody should know who they report to. Everybody should know this is what's going to get you fired. These are kind of my expected standards of performance. And they should also have engagement performance management. So within the firm, you should have quality reviewers coming to check work. You shouldn't just wait for your peer review or your AICPA inspection. Like, you should be proactively inspecting and grading your own work. And they should be doing ongoing monitoring, right? You put all these things in place, and then you should monitor to make sure everybody is following the rules. So you don't want to just put them in place and like set and forget, right? We want to make sure we're proactively monitoring that these rules are being taken seriously.